All right. So class, today I just want us to look at this good concept under cash flow. This good concept under cash flow statement. Preparation of what? Cash flow statement. Cash flow statement. Class, if you have been following, we have come a long way. At this moment, you understand the format of coming up with what? Or preparing the cash flow statement. At this moment, if you have been following. At this moment, you understand some of the activity or the activity involved in the cash flow statement. At this moment, you know that we have two methods of preparing what? Cash flow statement. Maybe to ask to see whether we are on the same page, please, somebody to remind me some of the methods of preparing a cash flow statement. Somebody to remind me some of the method of preparing what? Cash flow statement. Somebody is reminding me some of the method of preparing the cash flow statement. Who is to remind us? How many methods do we have? Direct and indirect. That is famous Matinda. Famous Matinda natuambia direct and indirect method. And in most cases, you'll find that during examiner will ask you to use you use this standard IAS 7. That means you are supposed to use what? The indirect what? The indirect method. What am I saying? Indirect method is common. Indirect method is common and highly examinable. Therefore, I want us to look at a question. That was tested in December 2023. It was question number 4. Financial reporting. Topic is cash flow statement. And then we are looking at this question number 4. It was tested in December 2023. December 2023. Good. Can you remind me of the 3 activities before I display my question there? Please remind me the 3 activities that we expect under cash flow. When we are preparing cash flow statement, we have 3 major activities. Now somebody is reminding Mwalimu the 3 activities. What are some of the 3 activities? Let's mention them. 3 activities. Somebody is giving us. You can mention one by one. Moja tu. It's not a must you mention all of them. Operating activity. Asante. Yes. Operating activity. Asante. Number 2, investing activity and financing activity. Investing activities. And the third one is what? Financing activity. Operating activity, day-to-day what? Operations. Day-to-day operations. Investing activity, It deals with what? Non-current what? Assets. Non-current asset. Did we purchase? Did we sell? Like that. Then financing activity, it deals with, we are trying to do what? We may sell share, we may acquire new loan, we may pay that loan, like that, like that. I want to share a question with you. I want to share the question with you. I want to share the question with you, and you have to look at it very well. Have to look at it very well. Have to look at it very well. So allow me to check my question. Check my question here. My question is somewhere here. Want to share with you this question. Downloads, where are my downloads here now? Okay, they are here. I have this question. Yes, this question is a nice one. All right, I'm now sharing my screen, and the question is here. All right, first of all, have a look at that paper. In fact, even your paper, you are going to do it in the morning. Financial reporting is a morning paper. It's a morning paper. It's a morning paper. You can look at the first question. That is a structure of what you expect in April. It's a month and some few days to come. Month and some few days to come. You expect to see such. You see that theory question. Sometimes they take it as question number 5 and replace question number 1 as mathematical question or computation. Therefore, you need to do what? You need to understand the structure. Can you look at what they were given as question number 2? Question number 2. That question, even without reading, you can tell me what it entails. It is automatically what? A group consolidation question. Very easy. A group consolidation question where we have 3 companies. Wachana na hiyo. Question number 3. This is I think this was a branch. Partnership. Okay, that's partnership. All right. Partnership. Now here we are. This is the lion, elephant in the house. Elephant in the house. Elephant in the house. Can you look at that question very well? If you can take a screenshot, of that question, the better. Because throughout our session, this is the question I want us to focus on. This is the question I want us to focus on. So please, by indication of Y for yes, let me know whether you have taken a screenshot of that question, that part. That is the first page. Have you taken the picture of that question? Sitaki kuacha mtu nyuma, so give me a signal. Give me a signal. You need to have the question with you. You need to have the question with you. Miss Winsry akonayo already. I want to get like 3 more. Good. Lenovo, happy to see you. Matinda, asante. All right. That is the first page. The second page is here. Kumbe hata haina additional information mingi. Chukua hiyo sasa. Pick that one and then we start working. Still give me a signal if you have taken the screenshot of that. Give me a signal, and then we start. Nishapata signal kadhaa hapa. That is very good. I stop sharing. Good. That is it. Now, the questions read, the following financial information was extracted from the accounting record of Bundo Limited, a public limited company. We are given statement of financial position as at that 1st October 2023 and 2022. Then we have been given the statement of financial position or comprehensive income statement as at that date. Additional information. The property, plant, and equipment was made up as follows. Cost of variation as at that date. Accumulated depreciation as at that date. Good. Then we have the carrying amount, which is the same as what? The net book value. So if you are to find out whether there was a purchase during the year of the PPE, you can either use cost or you use what? The net book value. Net book value. During the year ended at 1st October 2023, the property was revalued upward for a gain amounting to 1,200,000. A bright student is seeing where to record these transactions. Record these transactions. The company does not make any transfer for excess depreciation upon liberation. However, it accounts for deferred tax on liberation gain. The income tax rate applicable to Bundo Limited is 30%. Depreciation on property, plant, and equipment has been charged to profit or loss. During the year ended 31st October 2023, Bundo Limited acquired some patent rights at a cost of 5 million patent rights. Any amortization of intangible asset has been included in administrative expenses. The company repaid some borrowings which had matured during the year and issued new loans amounting to 3 million. They issued what? New loan. Unaona kwenye zinaenda. Very nice. You are required a statement of cash flow for Bundo Limited for the year ended at 1st October 2023 using the indirect method in accordance with the requirement of International Accounting Standard 7. So class, if the examiner has not given you, has not told you to use the indirect method, or if the examiner is silent rather, please use the indirect method. Please use the indirect method. Use the indirect method. And that is it. That is it. We start working. We start working. We start working. So allow me to remove this and start my question up there. It's December 2023, question number 4. As well, start my question in here. So this is a financial reporting. So that is it. We have to start with our what? With our heading. Huyu anaitwa aje? Bondu. Ni Bondu ama ni Bandu? Huyu jina yake inaitwa namna gani jameni? Bundo Limited. Bundo Limited. It is always good to show the examiner that you know the company that you are dealing with. Statement of cash flow. Statement of cash flow. Statement of cash flow for the year ended. For the year ended. This is 31st of October 2023. October 2023. Always scare the examiner by underlining your heading. You scare the examiner by underlining your heading. Can somebody tell me what will be the next thing to do? What will be the next thing to do once you write the heading like that? Once you have your heading like that, what will be the next thing to do? Somebody? I'd like you to note that it is always good to check whether our sharings are in million, whether our sharings are in thousand. In our case, we have eliminated 3 zeros are eliminated. 3 0 are eliminated. Therefore, we shall be eliminating 3 zeros. So our sharings are in thousand. 3 0 eliminated. Very, very important. Watu wengi wameanguka hii mtihani na wamerudi tena kwa sababu ya nini? Hapo mtu anafanya tu swali yake vizuri, but he or she forget to indicate this one. So if the sharings are given in million, please indicate. If the sharings are given in thousand, please indicate. I don't want you to fail. I want you to go to the advanced level. You do your BDA, Business Data Analytic. You live outside there. You get promoted at workplace. Tujenge nchi. Haya. Now we shall start with the cash flow from operating activities. Allow me to leave it at that point. Cash flow from operating activities. I'm using direct method, indirect method. I'm using indirect method. Can somebody tell me the first item that I should think of? Remember, this is a two-way. This is a two-way. What is the first item that I should think of under my operating activity section? I taught you the method. I showed you how we maneuver through this. So don't let me down. Wezi niambia umesahau na si kitambo tulipoangalia hiyo method. I think I should remind you for the first one. The PBT. The PBT. Thank you so much. This is Matinda. Profit before tax. Profit before tax. Profit class. If examiner bring this question or bring you a cash flow question, this is a mark that you should not fail to get. Why? It is a direct mark, a free mark. Can you give me the PBT? What is our profit before tax? What is our profit before tax? I'll give you an instance where examiner give you profit after tax. I'll tell you what to do. Where you're not given the profit before tax, we're given statement format. Can you tell me from our question, I think everyone is having a question here. Everyone is having the question here. Can you give me the profit before tax? I'm getting this from Maltida. It is 18,700. 18,700. I should put it here. 18,700. I have also to confirm. Yes, profit before tax is 18,700. 18,700. Faith pia amepata hiyo. I wish that kila mtu angetupatia what they can see. That is very nice. Good. That is a free mark that everyone should get. That's just a free mark. A matter of knowing where you place it, a matter of knowing where you get it from. Then from that point, class, we have to adjust this profit. This profit, for us to arrive to this profit, a lot has happened. A lot has happened. We have subtracted interest. We have added income if there is any, like that. So we have to adjust this profit. So adjustment for non-cash item is what follows. Adjustment for non-cash items. Adjustment for non-cash items. And class, if you remember very well, I gave you an acronym. Who can remember the acronym? I gave you a very nice acronym here. I gave you an acronym. Yeah. Let me see those people we were together during that time. I give you a very nice acronym. Who can remember? Dial. You cannot remember that. Dial GF, where this stand for depreciation, stand for impairment, stand for amortization, stand for loss on disposal, gain on disposal, of course, disposal of asset, and then we have finance cost. Finance cost is the same as the interest paid. Asante, asante, asante. This is Vivo 2015, Vivo 2015, Vivo 2015. Vivo, do you run that company which make women wear? You can stop your video. Can stop your video so that we don't affect other people's bandwidth. Already Jane had given us this. Agnes had given us this. That is very nice. So Vivo, please, you can stop sharing your video if possible. Kama inawezekana, just stop sharing your video. All right, thank you so much. Thank you so much. Now, class, having this, you will be in a position, to get some things which are direct. For example, I just want you to go, there's some people who are joining now, and I'm sure they don't have the question. Should I share the question with them? Allow me to share the question with them. Is that okay? I just share, they take the photo, and then we proceed. Remember, we are a team here. We are a team here. We are a team here. And we should be a good team. So take the picture very fast, very fast. December 2023. December 2023. We are looking at question number 4. Chapa yo, and then confirm very fast. Confirm. Remember, we have limited time. I'm having like 20 minutes. Oh, I wish. But I know you people, if I give you the guidance here, you'll be in a position to do this thing and share for marking. So take the additional information picture very fast. Watu leo ni kama walikuwa wamechelewa kazini kidogo. Kazi ilikuwa tight, lakini inaeleweka. Every month mambo inakuwa moto sana. You must prove that you have been working for you to get paid. You must prove kabisa. I hope you have taken the picture. Yes, you must prove. Edmund must prove. Kelono. Great. Now, I want to send everyone, I know you have that question. Can you check just above the profit before tax? Tell me an item that is featured here. Kindly. That's the way you pass this thing. Tell me an item that is featured here near our dial G. Just above. Above what? Above our profit before tax. Very fast. If you do it very fast, at least we'll be able to cover widely. Naona watu wananiambia finance cost. Acha niangalie pia mimi yangu iko wapi. Nikiangalia profit finance cost iko pale. Yeah, finance cost. What has been done to finance cost for us to arrive to this profit? What was done? Finance cost. It was subtracted. Therefore, if it was subtracted for us to arrive to this, adjusting this to its original position, we have to add it back. Finance cost, we have to add it back. Ni how much? Have to check. Finance cost ni ngapi? Is it 3,800? 3,800. Finance cost is 3,800, and we have to add back. 3,800. 3,800. That is very nice. That is very, very nice. Because there is no any other direct item there, I cannot see any other item which is direct. I proceed with my journey. I proceed with my journey. Who can tell me my next destination? My next destination from here. What will be my next destination? It is changes in what? Somebody, I'm hinting you. I'm trying to give you a hint. Changes in working. Changes in working capital. Changes in working capital. Changes in working capital. Changes in working capital. Now, here is another area. Here is another area that you recoup all the marks. You recoup all the marks. Why am I saying that? Because it's just a matter of looking. It's just a matter of looking at what happened. Can you give me the component of working capital, first of all? You might not have forgotten. No worries, we shall overcome. Give me some of the component of working capital that we put in here. Somebody. Component of working capital. Component of working capital. Nyinyi nawaona 18. Inventory is one of them. The other one, receivable. Remember we said something like RIP. Hizi abbreviation msione kama ni za mchezo bwana. Receivables, inventory, unazibeba hizi. And then we have payables. Hizi ndizo major, inventory, receivable and payable. Kama kuna accrual pia itafall here. Prepayment inaweza kuja ifall here. Now, somebody to remind me what we said when it comes to receivable and inventory. These are assets. How do we do it under changes in working capital for the assets? There is something, I gave you a formula, a direct formula where you don't have to think, was there an increase or was there a decrease? You don't have to think that. That era is far gone. It's far gone. Somebody to remind me. What did we say regarding the assets? I remember during that time, ama hamkuwa you class. Ama hamkuwa. Probably hamkuwa. Let me assume that everyone who is in this class was not there. Is my assumption okay? I just assume that you are not in that class that I'm referring. It is for our asset, it will be the opening value minus closing. For liability, it will be closing balance. I can call it even balance minus opening balance. Like that. OCCO. As simple as that. Now, let's go direct to our balance sheet and check what we have. Under current assets, niko na nini? Inventory. I want somebody to tell me what was the balance brought down. Or what is the opening balance? If I talk of balance brought down, the opening balance. What was the balance brought down for inventory? 5760. Let me see. I have to look at it. Asante. Now, examiner is always wise. He knows that people don't look at the years above there. And people tend to assume that the first column is for the previous year. But that is not the case. You can see the first column is for the current year. The first column is for the, so it's always good to be very keen. It is always good to be very keen. So we've been told by Agnes that our balances, the opening balance was 5760. So I'll just come here and say 5760 minus my closing balance for inventory is 5880. 5880. And then you give me the result, and the result must be put the way it is. If you get a negative, once you use this formula, if you get a negative, put it as a negative, reflecting what? There was an outflow. Remember, negative hiyo ni outflow, positive ni inflow. Haya, nipatie hiyo sasa. Nipatie hii. The difference, let's see whether there was an outflow or an inflow of stock. And I have to adjust my camera. It adjust the camera muone hizo ma formula. Negative 20 napewa negative 120. So you just put it direct. So that means there was an outflow. What does that mean? It means in our cash we purchased more what? More stock, and our cash reduced. Hiyo ndio inamaanisha we purchased more stock, our cash reduced. Na hii ina indicate tu hivyo. Unaona stock ilikuwa 5760 ime increase. So what has happened for our stock to increase? That means we have what? We have purchased more stock. So what happened to the cash? Since we are looking at the cash flow, tunaangalia what is happening to our cash. Our cash has reduced by 120. This is the money worth what we bought. First of all, can you confirm whether we are together up to that point? Confirm whether we are together up to that point. Are we together? Together. That is Winsley, Corinne, Karen. Good. Now, if we are together up to that point, Jane, let's move to the next item, trade receivable. Somebody to tell me the first value I write down ya trade receivable. First value yenye nitaandika chini ni gani? Somebody is guiding me here, telling me the first value to write down, and then we proceed. What will be the first value here? Somebody, you have them? Can you see 4290 in the year 2022? 4290. Kwa sababu that fall under what? Opening minus closing. Minus 4070. Nipatie hiyo. Give me that difference. You can see here it's like we had an inflow. Some people who owed us paid us. So our cash increased. Very important. 4290 minus 4070. Sinio? 4290 minus 4070. Nipatie hiyo difference. Your difference, najua it's a positive. That means those people who owed us, they paid us amount equivalent to what you are giving me there, 220, and therefore this is an inflow. So don't put a bracket, just put it because it's an additional to our cash. Then we go to the last one. We don't mention cash. Remember, here we are looking at cash. Therefore, the cash and cash equivalent you can see here, it will be used as the balancing figure. It will help us to know whether our question is balancing. So we don't use what? Cash and cash equivalent at this level. So we go to trade payable. So trade payable class is found under current liability, and I can see now for the trade payable I have to look at the closing balance minus opening balance. Kwa sababu, why are we saying that? Remember, if the receivables zinaenda e direction, payables zitaenda e direction. Na ndio maana niliwafunza, sijui ilikuwa when was it yesterday, when we were looking at ratios. When we were looking at ratios, we say that but I don't think you are the one we were, kwa sababu naona nyinyi ni kama nyinyi wote ni wageni. Wanakaa nyinyi wote ni wageni. Do you remember what we said, that if you owe your suppliers, you should take very many days to pay them. So you take more days before you pay them. Mishika. So that you be getting more profit from what? From the good they supply to you. That is the essence between what? The payable and receivable. Payable and receivable. If somebody owes you, they should pay you very fast. You should have a policy that they pay you very fast. But now, the better part is, the better or the worst part is that even on their end, they have a policy. On their end, they still have a policy. They want you to pay very fast. So, hapo ninyi mnajua vile mnacheza. So, liability go opposite direction with the asset. Opposite direction with the asset. So, in this case, we're going to look at the closing balance of our trade payable, which is 7,800. 7,800 minus 8,200. Can you give me the figure, what you get there, to what happened? What are you going to get? Allow me to adjust my camera kidogo. What are you going to get? Patia hiyo. Watu wanapata 400, which is a negative. Asanti. 400, which is a negative. That means there was a what? An outflow. So our cash reduced by 400. Our cash reduced by 400. Good. Having done that, we're still moving on well. You can come here and have the total cash flow after changes in working capital. Cash flow after changes in working capital. Working capital. Now you have to continue unless tax paid, and then less interest paid. Sasa, for the tax paid and the interest paid, you are advised to go direct to the current liability and check whether we had some balances. To the current liability to see whether we had some balances. So that is what we are going to do. Very fast, we check whether we had some interest in our under our current liability. We had current tax, interest payable. Once you see that, it will give you a green light. To proceed and get what? I want you to be very keen here. Nimeona ziko. Tax. At your account, this debit side, this credit side. Can you tell me? This thing we have sung for very many times. Which balance does tax has? Does tax has a debit balance or a credit balance? my fellow accountants, it has a credit balance. Therefore, the balance that was brought down is always credited. Once you say that tax has a credit balance, it is the balance brought down that we are looking at. The balance brought down is the one will dictate. Therefore, balance carried down will be on this side. Now, from the question, can you give me the balance brought down? Can you give me the balance brought down for a tax? This question is very interesting, very easy to pass, 5570, let me confirm. I have to confirm. Current tax, 5570, brought down 2022. Asante Agnes, 5570. And then carried down is for 2023. In fact, adjacent to the 5570, we have 4230. 4230. Sasa hizi vitu jameni, itakuwa ngumu kwenu kweli? It should not. Now, I want you to tell me or to guide me. If you look at the income statement, the provided income statement, can you see tax somewhere? Just check the income statement. Kuna tax walilipa? Ukiona niambie na ni ngapi? Uniambie ni ngapi? Aha, nimeiona. How much tax did they pay? Just check the original income statement. 4830. Yes, 4830. I can see 4830. 4830. Asante. 4830. No. Income statement. This coming from income statement. 4830. Can you tell me whether in the additional information, we have anything touching on tax? In the additional information, tuko na kitu inataja tax. In the additional information, do we have anything touching on tax? Oh. There's something nimeona. Kumbe tulikuwa mpaka na deferred tax. Tulikuwa mpaka na deferred tax. Nipatie mpaka hizo balances za deferred tax. Nipatie balance ya deferred tax pia. Deferred tax hii ni ya current tax. Nipatie balance brought down ya deferred tax. Hii ilikuwa moto. Hii. This was fire. Nipatie hiyo ya deferred tax. 70. Asante. Aha, na nipatie hiyo ya carry down ya deferred tax. 6750. Asante. Now we need to check whether we have any other information touching on our taxes here. Any other information touching on our taxes here? Naona kama tuko okay. I've seen an information touching on our tax here. I've seen. Can you see the revaluation? They are telling us of revaluation. Look at additional information number 1, where we have during the year ended 31st October 2023, the property plant was revalued upward for a gain amount. So revaluation gain was 1,200, right? 1,200. The company does not make any further transfer access to depreciation upon revaluation. However, it accounts for deferred tax on revaluation gain. It accounts for deferred tax on revaluation gain. The income tax rate applicable to Bundle Limited is 30%. Sasa, here we have to think what the examiner is trying to tell us here. So there was revaluation gain. there was revaluation gain, and this revaluation gain was 1200. So what is 30% of 1200? What is 30% of 1200? (30% of 1200) unapata ngapi? Aha. 360. Good. 360. And then when you look at our income statement, we are told revaluation gain on property net of deferred tax is 840. Now, can somebody tell me, where do we take your 360? Where do we take our 360? Somebody tell me where we take the 360. Somebody is telling me where we take your 360. Is it credited or is it debited? Aha, 360. Aha. And we credit under deferred tax. Ili sasa tupate the tax paid. We can call it what? Under on revaluation, there was deferred tax of what? Of ningapi? 360. Yes, 360. Now, can you tell me what was taken to the bank? And that is the tax paid. Tax paid yenye tunataka hapa. Hiyo swali ilikuwa hatari zaidi. Give me this total and then the balancing figure bank account. Itaenda kwa bank. Hiyo ni tax paid. Na ndio tunataka. Hey, hiyo watu wali sweat mpaka kwenye wafai kusweat forehead hapa. Na sweat hadi forehead. No, it's good to sweat anywhere else, but forehead. Ati sweat inatiririka kutoka forehead hivi. You can imagine. So give me the total. What's the total? I guess this side has more. So give me the total here. What's the total? But here your total so that our time today is trying to, but at least it is 17,830. 17,830. 17,830 paka hapa ni 17,830. Toa hizo mbili tupate what was the tax that was paid, and something which is paid, it is reducing our cash. Now give me this, Jane. Give me this minus 2. 6850. 6850. It was the tax that was paid. 6850. Therefore, this one we subtract. Now, for the interest paid, still we're going to use that method. I think interest account. This is credit, debit. Interest class ni kama haina maneno mingi sana. Balance brought down. Nipatie balance brought down ya interest yetu. Tumalizie hii. Carry down. Interest balance brought down ni ngapi? Interest 68. Yes, Karen, asante. Interest yetu nipatie. Taka tumalize, najua there are those who are wanting to go back to work. But then if you have not joined us, I can give you some details here. Our customer care details. They will assist you to join us. If you wish to join our ongoing classes, you can contact this number. Now, where do I use this number? 719 525 1,000. You're charging 4,000. 4835. 4,800. 3,500. And then tulikuwa na ile ya income statement. From income statement, finance cost 3,800. Haya, tuko na kitu kingine kweli inatu affect? Hatuna. So that one, you just give me the total here. And then we get our bank account. What did we pay? Bank account. What was the interest paid? Like that, as simple as that. So what's the total that side? That side inafaa kuwa 70 something, 8,600. Is it 86? 86 kwa sababu hiyo ni 88 kali 1. 8600. 8600. Aya, nipatie interest paid, nipatie difference hapa. Class, give me that, and then it is 5100. 5100, hiyo ndio pesa ilienda kulipwa hapa. 100, hiyo ndio walilipa kama interest. Now class, I want to give you I want to give you some task. Please go. In our question we have PPE. We don't have very many things. We don't have many things, but we have PPE. We have PPE. So under PPE we can get depreciation, and then we had intangible asset. We can get impairment. Once you go and attempt to get the two, go and create the PPE account. Go and create the PPE account. Go and create PPE account or draw PPE account. It's easy. And then try to get what? Try to get the depreciation PPE account. Let me hint you, give you a hint. PPE account, this is an asset account. So this debit, this credit. So the balance that is brought down will be on the debit side. Then balance that is carried down will be there, like that. This is an asset account. This is an asset account. Then anything that will reduce the PPE, kitu kama depreciation, kitu kama disposal, it will be credited. Anything that increases our PPE, like valuation gain, purchase of a new PPE, it will be debited. Please do me a favor. Go and do that. Go and do that as an assignment. Go and do that as an assignment, because the two items are the one remaining here for us to do what? To be able to do what? And remember, these two are subtracted in our income statement. Therefore, you will be adding them. You will be adding them. You'll be adding them. Then you sum all these and get total cash flow from operating activity. Total cash flow from operating activity. Total cash flow from operating activity. So that's in our next meeting. In our next meeting, we shall be proceeding to the investing activity. Investing activity. For the interest of time, I wish to stop at that point. I wish to stop at that point, unless there's a burning question. Unless there's a burning question, I wish to stop at that point. Remember, we have both a morning session for financial reporting and financial management, and then we have evening session for the same. Evening session for the same. The morning session starts from 5 a.m. to 7 a.m. Evening sessions run from 6 to 10. Of course, each session goes for 2 hours. I think that is it, class, for today. Thank you so much for having time and creating time to attend our today's session. I hope you have gained something, and we look forward to see you in class. I have been your lecturer, Stephen. Glad that you came. Goodbye and have a blessed afternoon. Somebody want to screenshot? Okay, allow me to